He was born into a very wealthy family, spent his life working hard to increase the family fortune, served in civic roles, and yet, upon his death, local people went to the church so they could throw stones at his coffin. His will, which was worth the equivalent of $170 million today, was contested in court, and the case lasted so long that the entire fortune was spent on legal fees, with not a single penny left for his beneficiaries. Today, we are looking at the bizarre life of Jemmy Wood, the renowned miser of Gloucester. This pretty little femboy was born on the 7th of October 1756 in Gloucester, a small town in the southwest of England, just by the border with Wales. Jemmy was born into an affluent family. His grandfather, James Wood, founded the Gloucester Old Bank in 1716, a private bank which thrived due to the increasing wealth of Gloucester driven by its proximity to the River Severn, the longest river in the UK and a key trading port, the surrounding agricultural land, and the timber and coal industries, the products of which were all transported through Gloucester. Jemmy's early life was largely unremarkable. He was privately educated at Sir Thomas Rix's school, and then joined his uncle in the family's drapery shop, selling cloth, fabrics, and clothing. It was during his apprenticeship at the drapery shop that Jemmy learnt the core family attributes of thrift, respectability, and honest business dealings. It was also during this time that Jemmy's business acumen shone through. It was reported that he excelled at bookkeeping, calculating interest, and assessing risk, all core attributes for his latter success as a banker. Jemmy's grandfather died in 1759, bequeathing the bank to his son, Jemmy's father, Richard Wood, and in 1802, when Jemmy's own father died, Jemmy, at the age of 46, became sole proprietor of the Gloucester Old Bank, where he remained in charge for the next 4 decades. Despite having led the bank as managing partner for several years, it was only after his father's death that Jemmy's full personality was stamped on the family business. During the duration of his tenure, driven by sharp business practices and extreme parsimony, Jemmy became the wealthiest commoner in the world. At his death, he was worth £1.25 million, the equivalent of £130 million or $170 million today. The curiosity is, how did the owner of a small provincial bank with only 1 branch and 2 clerks manage to accumulate such a huge fortune? Well, it turns out that Jemmy was nobody's fool. In the 1800s, it was still permissible for private banks in England to issue their own banknotes, despite the Bank of England issuing its own since 1694. And Jemmy's Gloucester Old Bank issued more notes than any other bank in the country. However, Jemmy wasn't orchestrating some sort of Bernie Madoff Ponzi scheme. It turns out that people had more faith in Jemmy's notes than any other bank in the country, including the Bank of England. At this time, all bank notes were promissory notes, which could be exchanged for gold or silver coin on demand. And Jemmy's reputation as a sensible no-nonsense banker, who would always honor his notes, made him the preferred banker in the country. Additional to this reputation for integrity, Jemmy issued bank notes in denominations of £1 and £5, which were far more useful to most people when compared to the Bank of England, whose minimum note was £10, the equivalent of £720 or $1,000 today. Jemmy, in true form for a miser, was also very particular about forged notes. In a time before security holographs and watermarking, each note was carefully examined before payment in coin was made. And if Jemmy was unsure about the validity of a note, he asked the customer to return the following day to allow for further examination. Upon the following day, Jemmy would be waiting in his office with a local police officer to question the potential forger. This reputation of Jemmy spread fast, and his notes were said to be the least forged in the entire country. With smaller denomination notes, a reputation of quick payment of gold or silver coin, and the absence of forged coins, Jemmy's Gloucester Old Bank issued more notes than all of the regional banks operating at that time, and was second only to the Bank of England itself. This reputation allowed Jemmy to issue almost £1.5 million in banknotes, a vast sum of money at the time and equivalent to £105 million or $140 million today. Jemmy was then able to use all the gold and silver that backed these notes to make loans and to invest in income-generating assets. And true to form, Jemmy was a very frugal investor. Jemmy himself abhorred debt and believed that it was a weakness. He considered anyone in debt was lazy, foolish, and unworthy, as compared to frugality being a moral virtue. Due to these beliefs, Jemmy would only extend credit when it was collateralized against real assets. His mantra was, "If you cannot afford to pay me tomorrow, you cannot afford to borrow from me today." He therefore only lent against property, land, livestock, and other assets easily convertible into cash, should the borrower default. And when debtors did default, even if by just a day, Jemmy worked at light speed to seize their collateral to repay his loans. Stories of Jemmy's zeal were legendary. A farmer who mortgaged his plough and 2 horses missed a repayment by 1 day. However, when he went to make payment the following day, Jemmy had already claimed the collateral as his own. The same was true of merchants in the town, who'd found their entire stock and financial assets frozen if they were late with a single payment. In one notorious event, a blacksmith who had taken out a mortgage and repaid the majority of the loan fell ill and was unable to work for a time. Jemmy foreclosed on the forge and home, evicted the blacksmith, and sold the properties for a profit. So energetic was Jemmy in seizing collateral from non-performing loans, it is said that almost 1/5 of legal proceedings in Gloucester at this time were actions taken by Jemmy Wood. Not content being ruthless with his own customers, Jemmy saved a particular zeal for his banking competitors. During the periodic banking crisis which occurred from time to time, Jemmy, with a safe stacked full of gold and silver coin, would prey upon his competitors who hadn't been so prudent in their affairs. During the financial panic of 1825, Jemmy bought all the bank notes of Sir Peter Pole's bank that he could get hold of, which was rumoured to be in trouble, for 10 pennies on the pound. He was then able to redeem these same notes for face value from the Bank of England when confidence had returned. In other such situations, he simply foreclosed on the bank, taking all their assets as repayment of the debt outstanding to him. It was during this financial panic that Jemmy discovered a new method of increasing his own wealth, preying on the clients of his competitor banks. Jemmy kept a network of legal clerks who shared information with him relating to bad debtors of competitor banks. When these debtors were in arrears and their own bank refused to extend their loans, Jemmy would offer emergency loans to the individuals at attractive rates of interest, but with harsh terms. Such loans would only be for a few months, secured against property, and with stringent repayment terms. When the inevitable happened, and the already struggling debtor missed repayment, Jemmy would immediately issue a writ of distraint with the local court, seize the security, and immediately auction it. The kicker here was that it was often Jemmy who bought the assets at auction, because he had inside knowledge of their value and the immediate means of payment. In one example, a farmer from Tewkesbury, a small market town 10 miles north of Gloucester, suffered a poor harvest. The farmer required a loan of £40 to pay for seeds for spring planting. However, his own bank refused the loan due to existing debts. Jemmy immediately stepped in with a loan of £40, with generous interest, but with a strict repayment schedule and secured against 2 acres of apple orchards. The loan from Jemmy had a term of 2 months, certainly not long enough for the farmer to generate an income from his still growing crops, and so, inevitably, the farmer defaulted. Jemmy immediately seized the land and, through a proxy, purchased it at auction. He then almost immediately resold the land for 3 times the value of the loan. This process of weaponizing money not only made Jemmy a small fortune, but it also further imperiled his rival banks. They would lose the client, who was now bankrupt, and would also lose access to the collateral, which could otherwise have been used to repay loans. In an early day form of payday loans, Jemmy discovered how to enrich himself and financially hinder his competitors, with the only side effect being a bankrupt farmer of tradesmen. But, as Jemmy already noted, debt was only for the lazy, foolish, and unworthy. The almost perverse outcome of this method of operation was that Jemmy grew a very significant, yet very bifurcated reputation. On the one hand, people wanted him to be their banker, because they had absolute trust in his ability to repay their paper money for gold or silver coin. Yet, on the other hand, they despised the man with a passion for foreclosing on bad loans made to their neighbors. The life of a banker seems to have been fairly consistent through the ages. People expect a strong and solvent bank, but they also hate you if you foreclose on bad loans. Throughout all of this, Jemmy cheerfully retained his mantra: charity begins at home and ends at my ledger. As his reputation grew as the most feared financier in England, Jemmy's customer base expanded dramatically. From his home and single branch in Gloucester, Jemmy attracted customers from 100 miles away. People came to him from the Cotswolds and throughout Wales, enabling him to safely issue more paper currency, store more gold and silver, and to ever expand his profits. In an early example of network effects at livestock markets in southern Wales, traders started to refuse the banknotes of anyone other than Gloucester Old Bank, the only bank they trusted to redeem the notes. The result was that everyone from the farmers to the butchers to tradesmen migrated to Gloucester Old Bank. This gradually decreased confidence in and the solvency of the local Welsh banks, many of which were liquidated in the following financial panic. This mass of customers, particularly for a single bank with one partner, 2 clerks, and 0 advertising budget, provided Jemmy with a further competitive advantage. Jemmy's advantage over his rivals meant he didn't have to compete on price, or in the banking sector, on interest. At this time in history, most banks offered an interest rate of 6% on deposits, but not Jemmy Wood. Jemmy wasn't competing for business. People actively wanted to bank with him because they trusted his ability to repay their deposits. Jemmy therefore set out a completely different stall. If you deposited less than £500, the equivalent of £35,000 or $48,000 today, you could expect 0 interest. For larger deposits, Jemmy was willing to pay up to 1%. However, you would receive no interest in the first year, and it would slowly build up over the ensuing years to the maximum of 1% after a decade of banking with him. The only exception Jemmy ever made was to the aristocracy. He was willing to pay as much as 2% interest to the landed gentry, but only if they made 4 or fewer deposits or withdrawals each year. Jemmy's rationale here was that if people saw dukes and earls using his banknotes, their popularity would increase even more, providing him with ever more capital for his private banking operations. There were 2 other unusual rules unique to the Gloucester Old Bank. First, any customer that was considered by Jemmy to be bothersome would be charged a small fee to make deposits, thereby encouraging them to visit the bank as infrequently as possible. And second, no one would receive compound interest. Where Jemmy actually paid interest, it was always calculated annually, and in subsequent years, no interest would be paid on earned interest, only on the original principal. And yet, despite these conditions which worked against his own customers, the customer numbers continued to grow. Like an earlier day Berkshire Hathaway, Jemmy discovered that being the banker of last resort meant that he got to set the terms that were acceptable to him, and people were free to accept or decline at their own will. And again, like Warren Buffett, Jemmy also discovered the beauty of float. Where Warren Buffett uses insurance premiums as a form of interest-free loans, Jemmy simply took people's deposits without paying interest, believing the safety of his bank was payment enough. Whilst Jemmy was keen to not pay interest on deposits, he was adamant that it should be charged on loans. The problem Jemmy and other money lenders encountered here were the usury laws. In England, until 1832, laws were in force which capped the maximum rate of interest chargeable at 5% per annum. Such laws were designed to protect borrowers from unscrupulous lending practices. However, Jemmy wasn't a man to be trifled with, and the idea of being told he could only charge the lazy, foolish, and unworthy people who wanted to borrow money from him 5% per year was anathema to him. Jemmy therefore designed his own system of interest which, whilst abiding by the letter of the law, completely obliterated the spirit of it. His first method of skirting the law was to make loans for less than a year, but charge the equivalent of a year's interest. A client borrowing £100 at a rate of 5% for 6 months will expect to pay interest of £2.50. However, Jemmy had the loan contract stipulate that the debtor would pay the full £5 interest in the 6 months. His argument being that he had no intention of extending further credit to that client in the year, and so, on an annualized basis, the 5% limit had been observed. Jemmy's second method was to charge discounts on loans. If a borrower required £95 for 1 month, Jemmy would create a loan contract for £100, but only provide the borrower with the £95 required, the £5 being the discount. Interest would be charged on the full £100 debt, and the debtor would have to repay the full £100, which meant, on an annualized basis, Jemmy would earn more than 60% interest. The third method was to add additional fees to the loan agreement. For instance, a borrower would have to pay a 1 guinea fee for the loan to be issued, 1 guinea being equal to £1 or 10% on a loan of £100 before any interest has been accrued. Finally, Jemmy still loved his practice of making loans to people unlikely to be able to repay, but whom had significant property to collateralize the loan. He was always happy to extend credit to such people, on generous terms, and always with a contractual obligation to the underlying assets. Another example of Jemmy's business practices, and demonstrative of his prowess of skirting the law, he once loaned £200 to a farmer who needed to repair a barn. The loan was for 6 months, had a headline interest rate of 5%. But there was a 1 guinea fee for issuance, and a requirement that the farmer had to repay the loan and interest in coin only, not notes. The loan was secured by a 10-acre orchard owned by the farmer. The farmer ultimately missed the final payment of the loan, and Jemmy immediately issued a court notice seeking to repossess the orchard, despite the farmer attempting to make full payment 2 days later. Jemmy had the orchard auctioned, which he purchased through an intermediary, and then sold for £400 several weeks later. On this single loan, Jemmy made a return of almost 300%. With his modus operandi established, Jemmy set about his business with a relish. He would gladly lend to reputable borrowers who were likely to repay the loan in full so as to provide an air of respectability to his banking house. However, as a man determined to maximize his profit, he was continually looking to find opportunities more aligned to his passion, where the borrower was likely to default but had significant property to pledge as collateral, where Jemmy could intentionally undervalue the value of the pledged collateral on the loan agreement, and where, after a borrower had defaulted, he could quickly seize the pledged collateral and auction it off in such a way as to buy it himself through an intermediary. When Jemmy had taken ownership of such assets, he would quickly sell them on at their fair market value. That was, unless the property produced a good and steady income, in which case he retained ownership and allowed the income to further swell his coffers. As a final example of his business dealings, a widow in Gloucester had inherited a small cottage, but had a £60 mortgage she could not repay. Wood, having bought the mortgage from a rival bank, which was in distress, but didn't want the reputation of foreclosing on a penniless widow, was less interested in reputation and demanded immediate settlement. The widow, unable to immediately repay the debt, found the property auctioned within a fortnight of Jemmy's purchase. Jemmy purchased the cottage through an intermediary, evicted the widow, and installed a rent-paying tenant. Whilst Jemmy wasn't in the habit of making speculations or grand purchases of country estates, he steadily amassed significant land, property, and company ownership by capitalizing on other people's distress. His holdings came to include tenanted farms, orchards and common land, malt houses, public inns, mills, townhouses and tenements, and partial ownership of canals and other incorporated companies. The man was able to use his significant resources, his prudent business practices of never lending more than 50% of the value of the pledged collateral, coupled with emotional detachment and an understanding of the law, to become the wealthiest commoner in the world, with a fortune equivalent of $170 million today. Throughout all of his career, it was reported that Jemmy was never aggressive in his public dealings, but also never merciful in his business dealings. However, there was also another side to Jemmy. That was how he spent his massive fortune, and the reality may be somewhat surprising. The sad reality is, Jemmy barely ever spent a penny. His entire life was used to accumulate wealth, grasping for ever more, but rather than enjoying his success, he lived in a state barely above destitution. So bad were Jemmy's habits that, despite being one of the richest men in the world, he was widely known as the Miser of Gloucester. In the age of pride and prejudice, with Misters Bingley and Darcy living in palatial country houses in the summer and spectacular London mansions in the winter, Jemmy Wood lived in a single room above his bank, which was barely furnished, unheated, and illuminated by a single candle. His wardrobe consisted of a single suit, which was careworn and heavily patched, and which Jemmy coupled with an overcoat in the same condition. So bad was his outfit that on one trip to London, which Jemmy always made on the public coach rather than engaging his own carriage, a stranger thought he was a tramp, always one for humour, and with an eye to a profit. Jemmy bet the stranger £5 that on arrival in London he would be able to withdraw £100,000 from any bank of the stranger's choosing. Anticipating an easy win, the stranger readily agreed, but was quickly stunned on arrival in London that Jemmy was treated like royalty in the bank and was offered the full £100,000 requested. The stranger duly paid the £5. In other journeys in and around Gloucester, Jemmy always sought to minimise his costs, and was once caught hitching a ride in the back of a coffin-laden hearse. He simply squeezed himself between the coffin and the rail and took the journey for free. As owner of several properties on Gloucester docks, Jemmy would often visit to check on his property, and he always timed such visits with the loading and unloading of the coal ships. Jemmy never missed the opportunity to pick up all the spilled coal he could carry so as to avoid the cost of heating his bank at his own expense. Similarly, when visiting the farms he owned and rented to tenant farmers, Jemmy was often caught pulling turnips, potatoes, and other available vegetables from the ground. Despite protests from many of the tenants and shouts of theft, Jemmy simply replied that he owned the property and was simply claiming what was rightfully his. Jemmy was so concerned about unnecessary expense that he refused to be married or have children. The thought of keeping such was too much to bear, and he simply lived alone for his entire life. Jemmy's only known distraction from his banking house was solitary Sunday afternoon walks, a time when business wasn't permitted and where any alternative social activity would likely have cost him money. Similar to other misers we have looked at in this series, Jemmy did not look favourably on charity. When he was regularly urged to donate to local charities and to provide relief to the poor, Jemmy simply responded with the words of his father, "Don't leave thy money to charity. It only makes so many rogues." To the best of available records, Jemmy never donated a single penny to charity. On the 20th of April 1836, at 79 years of age, and after a lifetime of working to maximise his fortune, Jemmy Wood died alone in the small room above his beloved bank. He left a fortune of more than £1 million, equivalent to more than $170 million today. His will, in which he took great pains to direct how his money should be allocated between distant family members, was so badly written that it was immediately contested in court. Part of the will included a codicil which left a sum of £100,000 to his hometown of Gloucester, but was contested as being a forgery and so far out of character as to be a laughable attempt at fraud. The sad tragedy, or beautiful irony, depending on your perspective, of the end of his life was that the ensuing lawsuit of what should happen to his huge fortune dragged on through the courts for so long that the entire estate was consumed in legal fees. The entire $170 million was paid out to lawyers who contrived with distant relatives to keep the estate in the courts to enrich themselves. Jemmy Wood, the banker who took advantage of everyone he could during his lifetime, was feasted upon by avaricious lawyers in his death. His relatives received not a penny of his fortune. And his beloved bank on Westgate Street in Gloucester. Well, the bank was sold to the Gloucester Banking Company shortly after his death, and the site today is a McDonald's. It's difficult to know what is the moral of this life. Possibly one should enjoy more of life before the final curtain comes down, and maybe taking advantage of so many people over such a long period of time will simply result in them turning out to throw stones at your coffin as it is paraded through the town on the way to the cemetery. Anyway, That's all for today, but I hope you'll join me next time. Thank you for watching.